Greetings. This is Balakrishnan again, and my apologies since this particular episode is being posted after a long gap of 1.5 months. This is owing to the fact that I was indisposed with the COVID-19 and decided subsequently to take sufficient rest. Well, in fact, soon after posting my last episode, that is episode number 21, I realized that I had worked out the sum without operating the demanded asset disposal account. However, each and every closing balance of the account otherwise was absolutely in agreement with the textbook answer. You know that main answers will be unaffected, since the asset disposal account is just an extension only. And after all, this account will not be having any closing balance also. However, in this video, I am opening an asset disposal account also and routing the necessary entries thereon. Further, one additional sum involving asset disposal account also I have scheduled for this video. Well, students, in my last episode number 021, I did not work out the sum in the way it was demanded. I mean, the asset disposal account I missed. Each and every section answer is perfectly in agreement with the book, but that's not enough. I have the responsibility of showing you the asset disposal account specifically. Hence, this video. This is the point where I had to make changes. I should not have shown it like this. Instead, the sum of this comes 6 lakhs. That is nothing but the cost of the asset that is about to be disposed of, the original cost. When we are in the process of opening an asset disposal account, we have to make this particular journal entry. Journal entry being asset disposal account debtor to concerned asset. Here, asset disposal account debtor to plant and machinery, or plant and machinery is credited by asset disposal. The sum of this amount, that is nothing but the original cost of the asset, and it will be like this. Okay, so naturally an asset disposal account comes to the picture. Parallelly, we should shift the accumulated depreciation in respect of this particular item also within asset disposal account. The entry being provision for depreciation account debtor to asset disposal, or asset disposal account is credited by provision for depreciation. This is the amount. How we have got this amount, I have clearly worked out and shown in my last episode. You will be comfortable with this video only in case you have watched the previous episode. Okay. Now, however, in the previous episode, as far as the provision for depreciation account was concerned, the amount is okay, but here instead of asset disposal account, I have shown plant and machinery account. That also, when we are under asset disposal account, it will be provision for depreciation account debtor to asset disposal account, as is shown in this case to asset disposal account. Okay. Thereafter, everything is one and the same only. Okay. Asset disposal account. So we have originally brought down the original value of the asset and parallelly the accumulated depreciation. This minus this will be the book value on the moment of sale, and X amount. Then we are accounting for the amount realized by bank, being a loss by statement of P&L account. Asset disposal account will invariably get nullified. There won't be any balance whatsoever. Even if it was a profit, this entry would have come here. Naturally, bank amount would have been more. So it has to be tallied. There won't be any balance. Okay. So this you keep it in mind. Thank you. Well, students, question number 35, page 16.62. DK Goel, Cbse edition 2019. What are the salient features of this sum? Well, this is a very small sum to make you very clear the concept of asset disposal account. So it is exclusively focused in that area only. And you will find we don't have to prepare the account for so many years. they expect us to prepare the account only in the year it has been, that part of the asset is sold. Only for that particular financial year only we need to prepare the account. For that purpose, they are given the year beginning balance of the machinery account as well as the corresponding provision existing. Okay, so that we will, as it is, bring to the account. Plant and machinery account, April 1st 18 to balance brought down 60,000. The corresponding entry for the provision opening balance brought down 36,000. So we have brought down both the opening balances, asset as well as the liability. Okay. Fine. Next, they say on 1st April 2018, they decided to dispose of a machinery for rupees 8,600, which had been purchased on April 1st, 2014 for rupees 16,000. It means from the purchase, a part of the main assets purchased on 2014 very first day, it has been disposed of. So since it is disposed of on the very first day, we don't have to calculate any pending depreciation for the current year. Okay. Only the accumulated depreciation for so many years, that means 4 years, we have to calculate. It will be like this. Purchased on 1 for 2014, 16,000. Disposed of on 1 for 2018, 8,400. So 4 years we have utilized it. And it is under straight line method, they are categorically given. Straight line method is the depreciation. So very easy for us to calculate. Okay. 16,000 original cost into rate into number of years utilized for. So 6,400. So that depreciation part we can account now. Accumulated depreciation account. What is the journal entry for accumulated depreciation account when you are under asset disposal account? Provision for depreciation account debtor to asset disposal account. Kindly watch my preceding videos in respect of the asset disposal account. Okay. Well, first of all, we have to transfer that part of the asset that is getting sold. What is the value of the asset that is getting sold? 16,000 original cost. The entry, what we have to make it asset disposal account debtor to plant and machinery. So that entry we have made. Asset disposal account debtor to plant and machinery. Asset disposal account debtor to plant and machinery. Then the corresponding accumulated depreciation. Just now I explained to you. That is how much? 6,400. What's the journal entry? Provision for depreciation account debtor to asset disposal account 6,400. Okay. Asset disposal account is credited by provision for depreciation account 6,400. Okay. Simple. At this moment, we know the book value of the assets getting sold. What is original value minus the accumulated depreciation existing. Now we have to find the profit or loss. It is like that. We have found depreciation of 6,400 accumulated for 4 years. Okay. Therefore, the written down value will be original minus the accumulated depreciation, that is 9,600. Loss will be book value minus the value realized. That means 9,600 minus 8,400. That is 1,200. Okay. So purchased on 1 for 2014, 16,000. Disposed on 1 for 2018 for 8,400. 4 years utilized. Return down value on the date of sale is nothing but original cost minus this depreciation, that is 9,600. Since it has realized 8,400, obviously the loss on sale is 1,200. Now let's just account that particular part. By bank amount realized, by P&L statement account for the loss. Now the asset disposal account is closed. It has to be invariably closed. I told you in the preceding sum also. It stands closed. Now what is our next job? At the year end, account for the pending depreciation in respect of the remaining asset. How much is there? 60,000 was the original value of the complete assets. Out of that, original value 16,000 got disposed of. Hence, 44,000 is the remaining assets at the year end. It has got a 10% rate. Since it is under straight line method, we need to look at the original value invariably every year end for calculating depreciation. It's simple, 10% of the original value of the remaining asset, 4,400. Entry will be depreciation account debtor to provision for depreciation account 4,400. That's all, over. Now balance the account one by one. Total heavier side, put it here. So this is the asset balance 44,000. It's in agreement with the book. And provision for depreciation. How to balance an account? Total the heavier side, put the same total across. Yes, 34,000. That's also in agreement with the book. Asset disposal account automatically turns nullified, and it has to be like that. So that's all about this small sum. It makes you very clear the concept of asset disposal account. Thank you. See you soon.